good morning Trinidad and Tobago, and welcome to the Bourse Report. Today we take a look at the financial results of National Enterprises Limited and Scotia Investments Jamaica Limited, two stocks on the non-banking sector of the Trinidad and Tobago Stock Exchange. In the case of National Enterprises Limited, the company would have recorded a substantial increase in earnings over its financial year ended March 2017 versus 2016 on account of improved performance of its investee companies. With respect to Scotia Investments Jamaica Limited, or SIJL, there was a marginal decrease in earnings. Let's take a look first at National Enterprises Limited, or NEL. And for the financial year ended 2017 March, National Enterprises Limited recorded an earnings per share of just around 30 cents per share, a 100% increase from the 15 cents recorded in the financial year prior. Total revenues would have decreased marginally around 2.2%, and this really reflects its holdings of National Flour Mills, which it owns 51% of, while gross profit, again a reflection of NFM, would have increased some 20.9%. The big story in the results has been the improvement in its share of profits of equity accounted investees, which increased from some $65 million to just under $146 million, majorly on account of improvements in TSTT's share of profits. Overall profit after tax increased around 83% from $109 million to just around $200 million TT. So let's take a look at share of profits of equity accounted investees, and what can we observe here? Well, there was a substantial increase, as mentioned, from 2016, its financial year, to 2017, from 65.3 to just about $145.9 million. However, this is a small victory in comparison to the sharp decline in earnings, in share of profits rather, that would have been registered in March 2015, its financial year of 2015. Diving a little bit further into the share of profit story, and we see that TSTT, as highlighted by this red bar, would have recorded a $153 million loss in financial 2016 and would have now swung to a profit of just around $25 million in financial 2017. With respect to the energy-related investee companies of NEL, however, there has been some deterioration in performance, notably in Tringen, which would have registered share of profits of $140 million in 2016 versus its $58 million in 2017. Similarly, across the board, there would have been declines, with the exception of NGL, which moved from $36 million to $43 million in terms of share of profits. So that's the share of profit story. How does that translate into dividends received by NEL from its investee companies? Well, despite the weak performance, or the weaker performance in financial 2016, NEL did manage to receive around $362 million in dividends from its investee companies over the same period. That's not the case in financial 2017, however, where dividends received in total amounted to just $60 million overall, with no dividends being received from its TSTT holdings nor its NGL holdings. And as we can see, NGL and Tringen, which usually account for the majority of dividends paid into NEL, would have declined substantially for financial 2017. So let's take a look at some of the drivers of these two major investee companies. In the case of Tringen, which produces ammonia, we can see by the blue columns that although exports from Tringen 1 and 2 have remained relatively constant, as a matter of fact increasing over the last 3 years, prices, as indicated by the yellow line, have decreased sharply. And we can see in 2014, prices for ammonia averaged around $500 per ton, whereas in 2016 it was around $235 per ton. For the first quarter of 2017, prices have improved marginally, averaging around $265 per ton, but we are still somewhere off the heady heights of 2012 to 2014 in terms of ammonia pricing. And turning to prices versus exports of natural gas liquids from PPGPL, we can see on a quarterly performance basis that there was some improvement in the first quarter of 2017 with about 2.4 million barrels of NGLs being exported, as compared to the first quarter of 2016, where just around 2.1 million barrels were exported. On the pricing side of things, there was notable improvement where the average price was around 55 cents Mont Belvieu prices was around 55 cents in first quarter 2016, and 2017 was a much improved 90 cents, but still somewhere off the first quarter 2014 pricing of 163 cents per gallon. So getting in the right direction, but not quite there as yet. So at a price of $10.50, Nell is trading at a price earnings multiple of just around 35 times, above the average of the sector of around 10.2 times, and offers investors a dividend yield of 3.3%. So on the basis of relatively muted performance, Bourse maintains its neutral rating on Nell. And turning quickly to SIJL, or Scotia Investments Jamaica Limited, for the 6-month period ended April 2017, there was a marginal decrease in earnings per share of just around 0.9%, from 5.7 cents TT equivalent to 5.67 cents TT equivalent. And this was driven by decreases of around 8% in net interest income, as well as an overall decrease in operating income of around 1.7%. Profit for the period, as you can see, declined around 1.3%. The big story with SIJL, however, is the proposal by Scotia Group Jamaica, or SGJ, which is the majority owner of SIJL with around 77% of the total shareholding, to take the company private by way of cancellation of shares by the minority shareholders through an offer to repurchase all shares at the Jamaican $38 per share, or the equivalent in US dollars. Now, at current rates, this translates to just around 30 cents US per share, and this will be offered to both minority shareholders in Jamaica as well as Trinidad and Tobago. So shareholders holding on to the SIJL shares could expect to receive, subject to the approval of the proposal, which is yet to be determined, around 30 cents US per for every share that you hold. Just a note, last week, Mayberry Investments, which holds about a 2.25% shareholding in SIJL, agreed to vote in favor of the offer. So right now, SIJL, at its $2.05 price, is trading at around a 12.2 time multiple in comparison to the sector average of around 10.2 times, and offers investors around a 4.6% dividend yield, which is quite healthy considering that SIJL also pays dividends in USD. But on the basis of a relatively muted performance and the fact that SIJL is likely to be taken private in the very near future, Bourse maintains, for the time being, its neutral rating on SIJL. That's it for this week's report. For the full report and more information, visit our website at bourseinvestment.com, email us at invest@boursefinancial.com, or give us a call at our new number 226-8773 or 2-BOURSE. Have yourselves a great investing week. This has been the Bourse Report.